What is up, everybody? Solomon here. Super excited to be with Genfinity, interviewing a multitude of builders across Web3. Today, we're going to be diving deep into the weeds for trade finance, tokenization, all things digital assets. We are super excited to have Nils Behling, who is the founder and COO at Tradeteq. So we're going to be digging a little bit into the XDC ecosystem as well here. That being said, we'll get the ball rolling. And Nils, how you doing today, sir?
Yeah, super well. Thank you. Amazing to be with you. And yeah, very excited to be talking about all these things.
We always like to start these out with a little bit of an introduction and an overview. So if you can tell us just a little bit about your role within Tradeteq and maybe just a brief overview before we dive into the weeds with Tradeteq here, that'd be great.
Yeah, sure. I'm very happy to do so. So as you said, I'm one of the founders and the COO here at Tradeteq. We're a London-based fintech and started, I think about 7 years ago, and have grown to about 54 people now. It's a moving number, growing. And what we do is we're an aggregator of trade finance assets. And what that really means is that we're bridging the gap between the originators of these assets, which can be banks, but more typically are platforms, alternative lending platforms, factoring companies, and the investors into these assets. And we do that by converting the underlying invoices, let's call them, into scalable financial instruments. So you have a lot of short-dated receivables, and we, through technology, legal tech, and real tech, IT, convert them into scalable investment opportunities that we can place with our partners. And to date, we have done this for a notional amount of about $4 billion US. And the platform has processed something like $15 billion US. And every day, we're issuing pretty much new instruments to our partners. We work with some of the largest partners in this industry, including some of the very largest asset managers and banks. And we see tremendous interest in this asset class.
100%. And I mean, Darren, I'll tackle one more and then we'll piggyback back and forth here. But I'm sure that you have some interesting thoughts on the road traveled thus far. So can you maybe talk about where, the onset of whenever you founded Tradeteq, where the industry may have been at that point in time as far as digitization was concerned, blockchain, and then to watch this kind of transition for real world adoption? Would love to hear maybe just a little bit of your thoughts on how far we've come.
I think we have come quite a long way since we started this business. It was really born of the idea that we wanted to invest, my co-founder and myself wanted to invest ourselves in trade finance assets. And as you know, these assets, again, they're basically invoices. Someone sells something to someone else, and there's an invoice to be paid. And instead of waiting for the payment of the invoice, you want to get paid today. So that's the basic concept of trade finance. You sell something, you make something, you sell it today, but whoever buys it from you says, I'm going to pay you in 30 days. You want the money today. And then you go to someone like a bank or a platform, a factoring company, and they give you the money today and collect in 30 days. So that's the underlying idea. And what happens, as you can see, these are very short-term instruments, can be 30 days, 60 days, 90 days, sometimes a bit longer, but you get the idea. They're self-liquidating. Because they get paid at the end. So after 90 days, whatever you had, the invoice is gone, and there might be a new invoice. And that poses another issue because these invoices are then revolving, they're replenishing. So the long story short, you deal with a lot of data and a lot of complexity. And when we started investing in this space, and we come from banking, asset management, and found this space very interesting as an investment thesis, we realized that it's very hard to manage all the information, data volumes, the fact that these invoices are here today, gone tomorrow, and that sort of laid the foundation for investing in trade finance. So that's one important item here. The other one was the realization when we started with this that this is was very much, and it's changing now, was very much the the domain of commercial banks. So you had commercial banks doing this business. They would fund their clients. Usually they would do this sort of as an ancillary business because they wanted to sell some other services, other goods, maybe some FX, some foreign exchange, what have you, hedging transactions. And then they would do this trade finance business as well. So we're coming in, asset managers, investment bankers, into this commercial banking world, and it was basically a new world for us. At the same time, there weren't a lot of investors because, again, the domain of the commercial banks, not a lot of investors understanding what's going on, and so all that led not only to the need for technology but also for a lot of education. And so we really had to go out and talk to people and tell them about the benefits of these assets, and can say something to that in a second, and why this is an interesting investment case. And maybe on that, why it is an interesting investment case. Well, trade finance really is, as we said, the finance of the international flow of goods and services. So whenever something is made, sold, produced, and someone has to pay it, there will be some form of trade finance. So it's a tremendous asset class. It's a more than $13 trillion asset class and growing. And pretty much everything you see, everything in the studio, everything around you will at some point in time have been touched by trade finance. Yet it's not very widely known because, again, the banks have played the cards very closely to their chest. So that's the educational element here, to tell people, well, this is really good because, yeah, these invoices get paid. And a good example here is it's an airline. Yeah? You always have airlines going into defaults. They have lots of issues. Everyone knows this. And what happens is that the bondholders get restructured. Their payments get pushed. There are all sorts of concessions that they have to make. But who always gets paid, as long as the airline wants to continue flying, that's the trade finance providers. Whoever sells the jet fuel to the airline, they will get paid. Whoever sells the in-flight meals to the airline, they will get paid. And why? Because you can't operate without this. And also, if that airline doesn't pay you, just take the fuel and sell it to someone else. So there is a lot of positive aspects about trade finance as an asset class, and we have seen this throughout the cycle, through multiple financial markets crises. This asset class has been super stable, very, very low losses, and very minimal defaults and very, very low losses in cases of default. So it's really very attractive. Of course, always the flip side to that is the yields are not as high as maybe other asset classes because it's very stable, but still, in comparison, what you can achieve as an investor in a comparable public instrument, say bonds issued by the same company, you will most certainly outperform those. So overall, super attractive asset class, highly complex, lots of education. And now coming back to the question, where did we start? Well, when we started, we had to face all these issues: building technology, understanding the asset class, educating investors. And I think we have come a long way for people accepting this as much more of a mainstream asset class. And now you will see there are very large investors like Goldman Sachs Asset Management, Legal in General, others of that caliber who are very active in this market, still specialized, but more household names, and we'll see more and more non-specialized investors entering the space, and technology definitely plays a major role in making that happen.
Can you go into a little bit more detail on the token that Tradeteq has, TRAD, I believe it's called? What's the utility of the token?
Yeah, so we actually have been working with the XDC network as our blockchain provider of choice for quite a long time. And the first tokens we did were actually, and I'm going back before Trader to sort of explain how we ended up there and where we're going now. We have been starting to think, is there a way of bringing this asset class, trade finance, real world assets, on the blockchain. And of course, XDC, as a blockchain built for trade finance, is the natural partner for that. So we started with a few NFTs that we issued, where we basically just took some of the securities that we issue, that we produce, and wrapped them into a token and placed them with an investor. And that was sort of more test cases starting. And the next iteration was to say, is there a way to make this more efficient, streamline the process more? And that was the Trader token. So we set up a full issuance platform in Liechtenstein. And the reason for that is that they have a very favorable environment for issuers of tokens and blockchain projects, and were very forward thinking, and did an issuance out of there, the Trader token. That issuance has, because it was done on a prospectus basis, directed and the general public, has come to an end. So Trader is no longer in circulation, really. But that was a very, very successful first start of looking how can we tokenize real world assets and bring them to the market.
Sorry, I'm unmuting myself there. Yeah, and I mean, I think to go back to your previous points as well, I mean, it sounds like trade finance is not a niche kind of industry anymore from an investment thesis standpoint, or would that be correct in kind of making that assumption? And I guess from your stance, I mean, I think, you mentioned kind of a $13 trillion asset class, but then you think about something like, the trade finance gap and how that might affect small and medium enterprises. Can you maybe just walk us through a little bit of that trade finance gap and how the technology can help to kind of empower some of these SMEs out there?
Right. Yeah, lots to unpack there. Maybe let's start first with the trade finance becoming more and more of a mainstream asset class, and we're not quite there yet. It's I think we're moving in the right direction. We see more and more investors having interest in this space, but it is still a moving feat, if you will. I think a good testament to what's going on is Tradeteq several years back started an initiative where the XDC network actually is also a member. It's called the Trade Finance Distribution Initiative, and the name is a giveaway. It's about how do you efficiently and effectively distribute trade finance assets to a wider base of investors. And that initiative started with just a handful of banks initially, HSBC, Deutsche Bank, Standard Chartered, a few others who joined this. And as you can see, they're all commercial banks. Of course, they have investment banking arms as well, but it was the commercial banks who started this. And by now, this initiative has, and there you have the website, as 100, I believe, and growing membership across the whole industry of trade finance, from asset managers to blockchain networks like XDC. And so the interest is really growing. People understand this. Last year, we actually organized the first TFDI, as we call it, Trade Finance Distribution Initiative, Investor Day live event. And that was overbooked here in London. We're going to have one this year again, focused on trade finance investors, and we're already kind of moving towards capacity there. So it is becoming a more mainstream asset class. But again, there is an educational element, but people understand, wow, this is maybe the last frontier in finance that has not been crossed, so to say. Everything else you can buy off the shelf: student loans, credit cards, auto loans in any shape or form. But trade finance is not really readily available. But we're moving there, and digitization can play a big role there. So that's sort of the asset class. Then coming back to the SMEs and the role that trade finance plays in the infamous, I would say, trade finance gap. And I have to say, this is actually a number, this trade finance gap, however large it is. The term was coined by the I believe the Asian Development Bank, and a few people there, and went to a conference. And whenever someone mentioned it, the team who had worked on that were high-fiving each other in the room. It was quite fun to see. But away from that, yeah, I think it's a real issue. So, and why is it an issue? Because again, going back, the banks, the large banks who have traditionally owned this market, have very much focused on their core customers, their biggest customers, and sort of the first tier of their customers. So if you're a very large corporate, if you're a very large business, you'll have easy access to trade finance, and the banks are very happy to provide it because they can sell you any number of other services and offerings, and it makes a lot of sense for them. However, the reality is that the majority of businesses around the globe are actually small and medium-sized enterprises, SMEs, and that's just what it is. And these have a very hard time of getting the trade finance they need. Well, sometimes deservedly so, because they may be too small, or there are other issues, but for a very large extent, those are very good businesses, but they still have, because they're not the first tier business, they're second, third tier, tail suppliers, as they're sometimes called, to larger businesses. They have very hard time of getting the trade finance, and that's certainly an issue, but that's also an opportunity, because this is where we see a lot of our originator customers getting active, because they have a large number of small suppliers who sell goods to a large buyer. So it's all centered around the large buyer, and you have all these small suppliers selling to the large buyer. Those are the guys who, on the one hand, get dictated the payment terms, because the large guy buying from them will tell them, well, I'm going to pay you in 60 days. And if you don't like it, then sell your goods somewhere else. What you going to do about it? So nothing really. So they have to go out and get this trade finance, and they're not typically getting it from the banks. But on the other hand, that's also where the value lies in this, because they're selling to a large guy. That large guy will typically have a very good credit rating, be of better credit quality than the person making the goods. So if you purchase these receivables, if you invest in them through, say, a note issued from our issuance vehicle, then you actually, and that's where the outperformance comes from, you can participate in the commercial benefit and the profit that the small guy makes from selling to the large guy, while having at the same time the risk of the large guy not paying you, which is much better than the risk of the small guy. So there is an arbitrage here, and this element of participating in the commercial benefits, really, that's a key concept for trade finance. And how does that work? So if you have an invoice that is payable in 30 days, you may be happy if you don't get the $100 today, but you only get $98. That might be a small amount to you, but if you annualize this in terms of a return, then suddenly it becomes a very large number, and that's where someone can share in your commercial benefit, and you will outperform, as I said before, any publicly traded instruments because they're priced differently. So that's again one feature that makes trade finance super attractive, and where the arbitrage comes from.
So the banks are governed by risk management, right? They have certain risk management that they have to adhere to, plus Basel regulations. So this platform is going to open up a lot more opportunities. Am I understanding that correctly?
Absolutely. So of course the banks have certain restrictions that they're facing, but at the same time, whoever wants to invest in these assets, whether a bank or non-bank investor who comes through Tradeteq into this, they want to understand what's going on in the underlying assets. They want to understand the risk. And of course, it's great when I tell you, oh, we're selling widgets to Walmart, and don't worry, they're going to pay you in 30 days. You still want to understand what's going on. But with the large amount of information, the large amount of data that's flowing around there, that's very hard. And so you really need technology to understand this. You really need technology to do the analysis, and that's exactly what we provide. We provide technology that allows both parties, the investors, but also the originators, to more efficiently work together, and then give the investors the ability to really understand what's in the packages that they're buying. And to give you a very concrete example, we recently issued through our issuance vehicle a security that was backed by about 500,000 invoices on day one. So if you wanted to run this on a spreadsheet, you would have a very hard time. Of course, not impossible. It's going to take you a very, very long time. And then given that these instruments are so short dated, every day you spend on analyzing it and making sure that the criteria, the selection criteria, the acceptance criteria for buying these invoices are complied with, it's going to cost you real money. So you need technology to be efficient, to process all the information, to understand what's in the packages, and to invest with clarity.
Gotta get better on muting quicker. So I want to kind of ask, it sounds like if you look across the trade finance industry, and I'm just curious because I feel like this is a similar theme when we talk about some of the things that blockchain can represent across multiple different verticals and industries. Would it be correct to say that a lot of the processes that kind of take place right now may be fragmented? There's a lot of maybe overhead in place in certain places that you could maybe streamline operations. You mentioned a spreadsheet for short-term scenarios, and that's probably just, I'm guessing, or I'm assuming that that's one example out of probably hundreds of thousands of examples. Or can maybe walk us through that process and tell us if it is fragmented or not.
It is very much fragmented, and when you think about it, a lot of the invoices that corporates produce, they're still done on paper. Someone prints a piece of paper, signs it, puts it in an envelope, sends it out. Trade documents, bills of lading, things like that are on paper and shipped around physically around the globe. So it's not that part is certainly not very efficient. Likewise, for the funding, you want to be quick, you want to be fast, you want to have the transparency. So digitization, looking at how can we get better, how can we get faster, how can we understand what's going on here is really key. And I think that's actually also where especially blockchain can play a big role in this, not only on the whole getting everything that is physical into digital format side, but also on the funding side. And that's where collaboration with XDC comes into play, is to say, how can we get bigger participation into this asset class? And I think Trader was a good example, because that was directed at the public, the general public. Anyone could effectively invest from Europe into this. But how do you open up an asset class that's very much the domain still of commercial banks, and now more and more large asset managers, and maybe smaller asset managers, but very professional investors, to almost everyone? And that's, I think, where blockchain technology, crypto, can play a big role, because features that allow for fractional ownership, for example, allow you to just fund very small amounts and open it up to a large investor base. And then, of course, other things that make it more efficient, and instantaneous settlement, atomic settlement of these trades, things like that, make it much more efficient, and you open the appeal for a much wider investor base.
Just briefly, I mean, I think this is one of the stats that I think we maybe have said a couple of times, but I give a shout out to Citizen of the Future, who does some cool research. But he talks all the time about the hand-signed bill of ladings. I mean, there's still laws that go back to the late 1800s to whatever, for supply chain initiatives and things like that, which is just crazy. And I know, Nils, you kind of are alluding to this too, and I would just maybe love just briefly your thoughts on the democratization of finance and investing and things like that, and what this industry, maybe represents as a whole. Because I know that you kind of alluded to that, in the previous kind of statement. So,
yeah, I think that let's go back to that thought about who really is the main producer of goods and services, and what's the majority of businesses here around the globe. And those are SMEs. They're small and medium-sized businesses Of course, they're very large corporations, but where the majority of businesses that you'll see, even in the largest nations, are SMEs, and so they create most of the jobs and everything that is connected to that. They're the lifeblood of the local community. So if you get them more funding and they thrive, you will get the direct benefits to everyone who works for them, everyone, they go and buy their goods. And so there's a very positive affirmation or knock-on effect, feedback loop here that you can create by getting more funding to these and getting more funding to them. And that's again where crypto can play a role, is by getting more investors into this asset class, opening it up to people who did not have access previously, because they cannot write a $10 million check on day one and then keep writing these checks in order to invest. That's where I see the potential.
Can you talk about the role of automation with all these new protocols?
Yeah, automation plays a key part here, because as you can see from the data volumes we're dealing with, and I gave you the example of the 500,000 invoices day one, and that then, by the way, keep replenishing every 90 days maybe, or it can be even faster. If you do not automate critical processes like rules checking for eligibility for your portfolio that you're investing in, for replenishments, for selecting assets, you're going to fail. So you have to have technology and automations that streamline these processes, because otherwise, this is going to be a train wreck.
Yeah, it sounds like the 13 trillion is going to grow exponentially as this opens up.
Yeah, it's only going to head one direction. People are going to consume more, and the more economies grow around the globe and come online with their demand for goods and services, we're going to see more and more consume, and that means that trade finance demand will rise, because again, almost everything, every good or service that you see, almost every good has been in some way affected by trade finance.
And you mentioned automation. I know, to Darren's point, I know that you guys leverage, this is always an interesting kind of topic for me, at least, because if you look at the adoption of, digital assets and blockchain and DLT, there's always like these little things that seem to be converging technology wise. So I know obviously the chat GPT moment, OpenAI and artificial intelligence. I mean, AI has been around for decades, obviously, but I know that you guys also leverage AI through Tradeteq. Can you maybe walk us through how you leverage AI and maybe how you see some of these other aspects of technology maybe converging within the infrastructure you guys have built out through Tradeteq?
Yeah, absolutely. We're very much active in that field, and again, we're looking at it from the perspective of originators of trade finance assets, but even more crucially from the perspective of investors into trade finance assets. And not only when you invest in these assets, you want the automation that allows you to optimize and streamline your operational procedures, but what's really crucial is that you understand the quality of the assets you invest in, and you want to have the ability to assess what's going on, where there may be potential issues in the portfolio in respect to specific buyers, sellers of goods. Where could there be stresses, and is there a way maybe even to predict these? And that's exactly what we're doing. We have a machine learning team that deals with these questions. They work on issues of credit analysis, scoring of corporates, and getting these crucial insights, and not only looking at individual businesses per se, but also at how are these businesses connected, how do they interact with each other, are there potential network effects? And that's actually something that's very exciting. We have looked at cases where our models actually very effectively and very accurately predict stresses in these systems. And the reason for that is that in many cases, buyers and sellers of goods are connected in one way or another. And if there's stress in one part of the system, at some point it will filter through. And even though traditional methods of credit analytics and forecasting don't show this yet, there is something happening sort of under the surface. And by employing these machine learning techniques and looking at these patterns and the networks and the connections, you can really see how the stress filters through, and you can come to predictions that are super valuable. So this is something that interests us very, very much. And it's something where we spend quite a bit of time on seeing how can we employ this when we make funding available, and how can we make this available to our investors.
Yeah, I think, Darren,
Yeah,
I'll
super interesting.
Go ahead in 1 sec. I just want to kind of add to that. And then I'm going to share screen, Darren, as you ask yours, to make sure that people can see the Tradeteq X account as well as the site and things like that. But you bring up an interesting point, Nils, where you think about all of this data and how it's, if the data is fragmented right now, then you can even take a step back and think about the compute and the ways that the data is leveraged or bundled or packaged, or what types of things you can do if you are optimizing the way that you're feeding in the data and all the different stuff that you have. So then you really get into like optimizing business decisions, investment decisions, all of these different things. So it's going to be exciting to watch. Darren, sorry to interrupt.
It's like you completely replace the role of economist with AI. It's really, really fascinating to me. But so I want to know, like, I don't know if this is necessarily your field, but it seems like blockchains are perfect for complex systems and traceability. So I was wondering if like there's recall, salmonella on produce type of situation where you're able to track and trace exactly what deal happened and how to replace it or how to make the deal right.
Yeah, I think the benefit of having a immutable ledger that records these transactions, and where maybe you also have, through some element of decentralization, some oversight, and move it away from centralized control to a certain extent, I would say. I think I would caveat that slightly. Definitely makes sense. I think for the finance industry as a whole, the ability to really rely on a single source of truth, that's something I think where the blockchain offers a lot of potential, combined with the ability to reduce costs and, again, operational complexity and overheads, human error, all these things. I think that's where we'll see a lot of development. And if you look, just recently figures published that I think a large part, a majority even of the Fortune 500 companies, one way or another, involved in blockchain projects, thinking about how they can leverage the technology, be it for the treasury, for parking funds, sending invoices. There is a lot of opportunity.
I'm curious, and I want to get into some milestones here with you guys here in a second, but I know we've been talking kind of in broad strokes about tokenization and things like that, but I would just love maybe your, from your standpoint, Nils, where you kind of see tokenization going. I think that's kind of what we're leading to here anyways with this discussion, a little bit at least, which is interesting because if you look at, tokenization, a handful of years ago, we were talking about real estate and things like that. And now you're seeing like a lot of different aspects, whether it's people, places, things, financial instruments. But what's your kind of viewpoint on tokenization as far as, we've heard that all the money is going to be tokenized, and then we've also heard it only makes sense to do certain things in the near term. Maybe what are your thoughts about, what makes sense maybe in the near term and then looking further out for tokenization across the industry?
I think that trade finance is an ideal field to apply tokenization, and we'll see more and more happening in that space, again under sort of the heading of democratizing finance, getting more access to capital to businesses that are deserving of that. funding and widening the investor base at the same time, reducing a lot of the complexities that are especially prevalent in an asset class like trade finance, with a lot of antiquated processes. And I think you said 200 years back. I would even go further. I think there are practices here that go back to the time of the Venetian merchants. Yeah, so it's really antique what's happening in this industry. So there is a lot of opportunity. I think right now, where you see a lot of tokenization happening, of course, is the treasury space and everything that's related to short-term assets, which makes sense because that's something where people can immediately engage. You can put small amounts. It's very liquid. And in fact, it's something that we have been active, and it's a space that we have been active in as well.
Darren, I know you have one, and then we'll get into maybe a little bit more about tokenized treasuries. I know that you guys have been active there, but Darren, I know you got some great questions. So,
yeah, I wanted to ask your opinion about the MiCA regulations and the path forward with MiCA regulations.
Yeah, so MiCA is going to come into place on June 30th, and it will increase the requirements on stable coins. I think there are a few stable coins where there are question marks whether they will still be in circulation post MiCA. Don't want to speculate here, but there are question marks around that. I think overall it's a positive development, I'd say. I think making sure that there are sufficient assets backing these stable coins will hopefully increase adoption, and increased adoption makes a ton of sense to me. And I think to open the lens a bit and to give you our approach to the whole question of regulation, I think crypto has, deservedly maybe, but less and less so, luckily, deservedly in the past had the reputation of wanting to fly under the radar of regulation, of avoiding regulation, and then you had a few bad apples that on the surface embraced it, but really were preaching water and drinking wine. I think literally. But that's we have always, and that has been the approach together with XDC, we have always embraced regulation. Whatever we have done in this space has been with a very clear eye on what does it mean. That's why, for example, you mentioned our trader offering. We went full in. We got a full prospectus under the prospectus regime in Liechtenstein produced. We worked with the regulator, had meetings with the regulator to make sure that they're on board with what we're doing, and to produce a very, very stable and regulatorily compliant product. And I think it's important because, after all, you want people to invest. You want them to trust you to a certain extent, and you can't do this with a clear conscience, at least, if you're not fully compliant. So it's something that has been very, very important to us, continues to be very important to us to do the right thing here. So I think having the markets and crypto assets regulations come into place will certainly be, in my mind at least, a positive development, and hopefully bring additional funding and additional participants to this market, because it will give people confidence that there is substance.
Yeah, I know we kind of got into this prior to that question, but you talk about tokenized treasuries, and I think this was, I want to say, like August of 2023. Tradeteq launching U.S. Treasury bond token with Securitize on Yieldtech. If you could maybe just walk us through why tokenized treasuries, the relationship maybe with Securitize, and maybe tell us a little bit about what the Yieldtech platform offers as well.
So Yieldtech is our USDY. That's the name of the token, USDY issuer. It's a Delaware company, and we're issuing tokens to accredited investors in the US. Indeed, we're working together with Securitize. They're the transfer agent for this offering. All the investor onboarding goes through their platform. So that's a very successful collaboration between XDC, Tradeteq / YieldTech, and Securitize to offer these treasuries. And for us, it was a natural starting point to embark on this or continue our journey, I should say, in the tokenization and asset space. We wanted to have an offering specifically targeted to the US market. And again, something that is regulatorily compliant and going through the ETF, that in fact this is backed, USDY is backed by BlackRock managed ETF, was a very good way to do this and to set another proof point in how do you move forward with the tokenization of assets, how do you attract additional participants into this ecosystem, again, with something that is very liquid, that is transparent, that they can buy and sell easily, and that is also maybe easier to understand than trade finance, which as we have explored, still is an asset class requiring a bit of education. And however, that said, we're not resting on our laurels. USDY has been a huge success, but we have more things coming. We're working on a few new exciting projects together with the team at XDC. I'm not going to say more than that, but say watch this space. There is more coming, and it's going to be super exciting.
So if I wanted to take out like a smaller loan, let's say I wanted to buy 100 PCs off of Alibaba and resell them, would I be able to do that on Tradeteq currently, or is that something that's going to happen?
We are not dealing with corporates directly, so our model is to always work with an originator who aggregates these corporates, and that's a question of scale. In order to get the financing in an efficient way, you want to have a sufficient scale here. So our originator clients, customers, are really platforms who go out and aggregate these businesses. They do the credit work on them. They do the analytics of the analysis, credit analysis of the buyers and the sellers. They look at this and then they come and present it to us, and we include this into our funding program. So you wouldn't be able to come to us directly, but working with one of these originator clients would be the route for a corporate to go.
Yeah, I'm curious, Nils. I mean, we're kind of, before we ramp down here, I know that there's, Darren and I talked about this. I remember when we were first doing podcasts, Darren, looking back in like that was like 2020 or 2021. And you look on CoinMarketCap and there's like 12,000 digital assets out there. And now if you look, I think there's like millions. But can you maybe just, which is ridiculous, I know. Can you maybe touch base just a little bit on, why you guys chose to work within the XDC ecosystem as technology infrastructure is concerned, what that represents uniquely for a platform like Tradeteq?
So we're super excited about crypto, about tokenization, the prospects that it offers. And for us, it was important to find a partner here who has the same vision as we do and the same understanding, and XDC as the blockchain focused on trade and trade finance was almost the natural partner for us. The team there has a very deep understanding of what's going on, not only in the crypto space and everything blockchain, of course, but also when it comes to RWAs, to real world assets. They really understand this. They have a clear vision. So there was almost no question for us that we'd be working with them. And it has been several years now. And it has been a super successful collaboration. And we're excited to continue this.
And then I kind of want to. Oh, go ahead,
sorry.
Darren. You go. Let's sneak one more awesome Darren question in, and then we'll do some forward-looking statements here. But Darren, go for it.
I just wanted to know, since you started your journey, what's something that you're particularly proud of?
The fact that we have always managed to push the envelope a bit more and move forward a technology side, from an offering side, and always take the next step. If you look at the way we started, I mentioned it, with just an NFT, taking a traditional security, wrapping it in an NFT, creating a smart contract around it effectively. That was the first step. Then from there, moving to trader tokens in Liechtenstein, and from there then to the US with USDY. So there's always an iterative process here, and I think the ability that we're constantly innovating, constantly moving forward is something that I think we're very proud of, and it's part of our DNA, really.
I mean, it went from 2 to 48 employees, right? So that you're giving families, an income.
I think 54 now. We're more.
54.
Yes. So Tradeteq really has grown. I think that's also we started with an idea, and the business has grown. So I think that's also a nice thing to see.
And then always like to ask if we missed anything, Nils, or if we didn't miss anything. And I think you alluded to some cool stuff going on behind the scenes, building out with the on the XDC network as well that we haven't heard about yet. So stay tuned to this space, as you mentioned. But we always love to hear forward-looking statements. Anything that you maybe are directly excited about that we didn't talk about that Tradeteq's doing, or that the XDC network is doing, or just even the wider space. And there's probably a lot to unpack there too. I just wrapped in 4 questions at once. So,
gee, how much time do we have?
Yeah.
I think we're as you can see, there's a lot happening in this space. We're super active here. We have a few cool things teed up and almost ready to go. So that's something that I'm not going to say more about it, but I think it's definitely worth watching what's happening at Tradeteq and XDC. So that will be coming. I think otherwise, continuing with USDY and just generally getting more investment into trade finance. We have a few ideas there as well, how to broaden the appeal of the asset class, how to make it easier to invest for certain investors. So there's a lot of things in the pipeline there as well. I mentioned our trade finance distribution initiative event that's happening later this year. Looking very much forward to that, to catching up with industry participants. XDC will be there. They're actually one of the premier sponsors of these events, and you'll be hearing from the team directly. So that will be a great time to interact and mingle a bit and learn more. So lots of things happening, and I think it's all looking super good.
Awesome. Well, for those in the audience, and obviously this video is recorded as well, we'll be pushing it out. If you want to learn more about Tradeteq, go to tradeteq.com. That is TRADETEQ.com. Same thing on X or Twitter at Tradeteq. Super honored to have the ability to interview Nils Behling, who is the founder and COO at Tradeteq. And also want to give a huge shout out to the XDC Foundation for making these types of interviews, spaces, articles, press releases, content possible through Genfinity. Nils, such a pleasure to be able to interview you today, and thank you so much. And you too, Darren. Thank you, guys.
It was a real pleasure.
Thank you.
Nils. I appreciate your perspective and your knowledge. It's always nice to talk to the experts.
Thanks, guys. Appreciate it.